Progress, still expensive, though.
Yeah, look, we're pretty pleased with what we're seeing, but we know that this is not enough. Oil prices were over $120. The American oil price, WTI, was at 118 or 120 just about a month ago, a little more than a month ago, 6 weeks ago. And today it's at about $94. So that's a remarkable decrease in oil prices. And gasoline prices at the pump, which is the most important metric at the end of the day for the American consumer, have come down significantly. As you just said, 75 cents, but that's only the average. The reality is the gasoline price for most Americans is already quite a bit below $4 at $3.89 or $3.90. So that is the right direction. We've been clear we want to see more.
We have Jim Bullard here, St. Louis Fed president, and some of what we're seeing, the progress that's being made, is demand. In other words, the Fed is raising rates, trying to orchestrate a soft landing. I don't know how much of it has to do with supply still, and increasing supply at this point. I know we did the SPR, but whenever we're on, I kind of get you to concede that we're not doing all we can regulatory-wise in terms of opening things up domestically. Do you still take issue with that? Would you argue that, in terms of permitting and in terms of refineries, pipeline, whatever you want to look at, do you think that we've done a Manhattan Project for domestic hydrocarbon production? We just haven't, and we probably need to.
Look, Joe, you said a few things. Let me answer all of them. First, I think that, yes, demand is an important part of this, obviously, but gasoline demand is not down. Gasoline demand is either flat or up during this driving season compared to before. So prices are still coming down despite the fact that we have not seen really a demand destruction in gasoline and demand. And we're in the middle of the highest demand season of the year in the summer. And we're right in the middle of that. We have another month to go in that demand season, and still we're seeing gasoline prices come down during this high demand season. As far as what we need to do, we have been very clear, and the president has been clear for the last several months. We want the oil industry, the oil and gas industry, to increase production. You've just seen the second quarter results from some of these companies. They are record profits. And in comparison to those record profits, which are really coming on the backs of the consumer, they should be investing those dollars right back into production increases. They have the permits they need. They don't need permits. They need to put together the frac crews. They need to put them together and invest so that they can have additional oil output. As far as refineries, look, we have to face the reality that over the pandemic, during COVID, some refineries shut down in the United States. Refineries shut down in Europe over the period before the pandemic when the Chinese were taking over the building and exporting of refined products. So we have lost some refining capacity. We would like to work with the industry. We've met with them. We've discussed this with them to see how we can be supportive in ideas to increase the life of some of the refineries that are currently in operation and to bring back additional refining capacity. But at the end of the day, the prediction in the market on your show was that we were, just about 6 weeks ago, was that you remember JP Morgan talking about $350 oil, and we were talking about $7, $8, and $9 gasoline. Instead, we've brought the prices to below $4 for most Americans. I think at any rate, doing this during a time when the third largest oil producer in the world is at war, that's quite remarkable.
Jim?
Yeah, I have a question. Thanks for your discussion here. It seems like China didn't grow in the second quarter, and now they're expected to come back in the third quarter. So it seems like the risk would be to the upside on international oil, just based on that sort of simple assessment.
Well, I have to say that I've been on a couple of shows about 3 months ago, and I was asked a similar question about the fact that Chinese growth was coming in the second quarter. So let's see what happens in China. That's every time they look like they're coming out of lockdowns, they keep going back to lockdowns, and they haven't been able to manage that part of the economy. So we'll have to see what happens. At the end of the day, though, we want to see additional oil supply on the market. We'd like to see more refining and to see prices go down. But look, we're not going to be able to only keep increasing production as the world keeps increasing its demand and appetite for energy products. That's why we have been so supportive of doing two things at the same time. making sure we have enough oil on the market now, and increasing the diversification of supply and diversification of demand away from just relying on oil. And I know that that takes time, but the investments have to start today, and that's why I've been pushing so hard on electric vehicles, which obviously that's going to take time. But we're very bullish on the fact that we can get to, especially with the legislation in the Senate now, that we can get to a faster deployment of electric vehicles and start working not only on increasing supply, but decreasing demand.